We are back with you, keeping a close eye on our ag commodity trade and some of the other commodities, one of which would be crude oil. When you're talking energies, you have to talk about crude oil. And here is a look at what the price is doing. We have the October contract on West Texas Intermediate crude now 16 cents higher. So it's easing away from its earlier highs of the day when it got up to 71.22. There was some concern about disruptions to the oil supply from hurricane and now tropical storm Nicholas on the eastern Texas coast, now heading up toward southern Louisiana. But I just saw a news story here just a moment or two ago that said the Colonial Pipeline has two of its main pipelines that it has shut down temporarily already, heading between Texas and North Carolina, and that serves much of the southeastern U.S. So a little firmness there, but just wanted to call your attention to that. There could be temporary, they say, disruptions, hopefully not long term, as this is not a major hurricane. Well, let's take a look at our grain trade right now for you. And of course, sometimes the energy markets can have an impact here on the corn, and we have December corn hanging in there with a gain of 3 cents at 5.16 per bushel. On the soybeans, with our quotes provided by Bar Chart, November soybeans, they're really struggling just to keep their head above water today. They're only a penny higher at 12.85 They've been on both sides of unchanged. And on the wheat in Chicago, you have December now trading 11.25 higher at 6.98 Apparently, it's their turn to run today. Kansas City wheat has also been pretty strong, 11.5 higher at 6.97 And in spring wheat in Minneapolis, you currently have December trading 9.75 higher at 8.85 Let's go to Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. Obviously, it appears that it's, the wheat market's turn to run today for some reason here. And Brian, if you have any background information on that, I'd appreciate it.
Good morning, Marlon. Stats Canada was out this morning with updated production figures, and they did lower their estimate to about 21.7 million metric tons. So it's a step in the right direction. I think the USDA is probably still has their number too high of the Canadian production. They're at 23 million. So this is a little bit of a friendly number, and wheat market is trading off of that. And you look at the forecast that we had just seen on your station there. 100-degree temperatures and through the Kansas, Oklahoma winter wheat regions, there's not much incentive to plant wheat this week. When temperatures are that hot, conditions are dry and fairly windy, it's not a good time to be planting the winter wheat crop. So that'll start, maybe next week if temperatures break a little bit, we get some rain in the forecast, we'll be able to get going. But I think the market's trying to put in a little premium because of the tighter stocks, tighter production numbers, and this heat that's coming in that's slowing the winter wheat seedings numbers.
Well, that it could do, but it will also help to really dry down that corn in a hurry. And I know even in the Mid-South, I had heard people talking about a week ago where corn was testing in the 30s, and then a couple of days ago it was down to 17 already. So, you get temperatures like that out in the plains, it'll dry that corn down really fast, and we'll have some full-bore harvest coming here in the next few days, don't you think?
That's for sure.
All right.
Yeah, exactly. Yeah.
Well, Brian.
We'll get a lot of harvest activity coming up here, Martin. Sorry about that. A lot of producers talking that they're starting or getting ready to do that because of the heat and the maturity levels that we're reaching in the corn and soybeans both.
Well, good points. All right, Brian, we'll come back in a moment, and I'll see what you have heard about the cash cattle trade today when we come back in just a moment. A lot going on there. We'll be right back. Let's go back to Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri, and Brian, you and I were talking during the break about the JBS situation in Grand Island where they had that packing plant fire over the weekend. Just wondered what you have heard as far as any additional information through the cattle wires today.
Yeah, we had heard that they were supposed to be operational again, but early this morning there was a couple trucks that were turned away. They weren't quite ready, but I think they are going to be going probably this afternoon. So it looks like they just maybe weren't ready this morning, but later today they will be doing some kills. So it should be almost back to normal by later this afternoon. So I think the market sees this as a positive from the standpoint that disruption was not very long. The Holcomb, Kansas fire plant, that really soured the market for some time, but we were down for much longer during that period. But the market's certainly trying to recover today after yesterday, where probably put in our fall lows. We came really close to some summer lows in both the cattle and the feeder cattle, and having a pretty strong rally, snapback type rally today.
Yeah, compared to that Holcomb fire, this, fortunately, I believe, it sounds like it must be a much more minor event away from the main processing floor, I believe. It was more in the rendering end of the plant, I believe, right?
Right, that's what we had heard as well. It was just on more of the rendering end, more of a rooftop, so there's not really a dramatic effect to the fact that they are their kill floor, their kill space.
Okay, well, let's look at our live cattle trade then. And on the big board right now, we do have a higher tone across the board today. On live cattle futures, we're showing gains on October of 205 now at 124.35. And now December is 262 higher. Look at that, 129.77. We haven't seen upward moves like that in live cattle for quite a while. On feeder cattle, we've had huge moves to the downside recently, but not to the upside. And they're really getting after it today. October feeders now $2.55 higher at 158.10. And now you have November, January, and March all over $3 higher. How's that for a switch on the feeder cattle market? Brian was just talking about the fact that they may have been oversold, at least, to bring some buying back in. Lean hogs, we have the October down 7 cents at 80.70 per hundredweight. But you look at December, it's down a dime at 73.27, just kind of treading water here on the lean hog trade. What do you think, Brian?
That's a victory for the hog market if they can at least tread water and be steady here this week. This market has been in a free fall all the way back to the June lows, and it's sitting on some rock solid weekly support. And this is an area that badly needs to hold for this hog market. It really can't afford to fall below this support area and close below it, or it's going to risk more technical selling coming into the marketplace.
Okay, well, Brian, thank you for joining us. Always good to talk with you, and good luck out there in the markets this week. Brian Hoops of Midwest Market Solutions. Tammy, back to you.